Hello, welcome to the show.
Hi, my name is René.
Okay, don't talk like that. That's fucking creepy. You know why it's creepy?
Because it's creepy.
No, because, and I'm going to blame age on this, but I watched a scary movie yesterday, and I've never used to be really scared of scary movies, but yesterday I watched in the afternoon, 3 o'clock in the afternoon. I was terrified. I watched about 6 hours of Dora the Explorer afterwards.
I know what you did yesterday afternoon.
Oh my God. Seriously, I blame age. I used to love scary movies. I'd watch them. And then maybe a few years ago, I watched it's an older movie called Mirrors with Kiefer Sutherland.
Oh,
And
yes.
it seemed like I was like, oh, I love scary movies. It's going to be great. And then I couldn't look in the mirror for the next 2.5 years just because I was fearful that my reflection was going to move.
I think your balls are shrinking as you age. So you don't have enough balls to muster up the courage to watch a movie without shitting your pants.
Maybe that's it. But the worst part is that this director has made 3 different movies, and this is the first. And so now I'm kind of afraid to watch the next few because, again, I think it's just age.
Oh, you'll really be shitting yourself by the third one, aren't you?
Well, that depends.
Bad dad jokes out of the way.
This is Taming the Hustle.
Or something of the sorts.
All right. So, hey, no more scary talk because I
Because your
don't
balls are
like
shrinking.
it. Yeah, my balls are shrinking. Hey, I want to talk today about how to do marketing during a price inflation.
Oh, yes. I'm looking forward to hearing your take on this, sir.
Yeah, it's very exciting, you know?
No, but it actually is. I mean, it's pertinent to the environment we're living right now. So
Well, here's the thing.
what thing?
Here's what thing. Here's the thing. I have a lot
What
of
thing?
clients. What thing? Well, I'm going to tell you what thing, fucker. I'm just going to turn my headphones off. Here's the thing.
What thing?
I have a lot of clients come to me and ask this. The prices are going up, and we actively go to our clients beforehand when we start seeing an inflation, and we start to try to get ahead of the game. And we have clients that we just do consulting with. So they are on the outside kind of looking into the marketing world. They're doing it themselves. They're trying. We're giving them advice, which is great. But at the same time, they get stuck, especially when a price inflation hits. So I wanted to talk about that today, and I'm going to give a couple tips. And the first is understanding your clients or your customers, whatever you want to call them. What I mean by that is, let's say you're a butcher shop, okay? And inflation is on the rise. And let's say your top product is ribeye steak. Really, there's only 4 types of customers, and it's how they respond to those higher prices is how you have to try to figure out what that puzzle piece is and how to retain them. So the first one is those who downgrade. And what I mean by that is they're always buying the ribeye steak. Now they're downgrading to round steak or burgers or something on the lower end.
I'd rather have ground meat than some sort of tough piece of meat. Just my opinion. So I've got a joke for you since we're talking about butcher shops. So there's a group of cows sitting around a poker table and they're smoking weed. The stakes were high.
Oh man, the dad jokes are flowing today.
Oh yeah, they're just flowing like melted butter.
Melted butter. So that's the first type of customer is the cow with the steaks that are high. No, just kidding. So like
Such
I said,
a stupid joke.
The first one is those who downgrade. The second one are those who continue to buy the ribeye, but not every week. They used to be once a week. Now they're once a month. Then the third type of person is those who may still buy the ribeye, but at a smaller portion. Now, the way you can kind of think of this is like, think of a bottle of pop. You normally buy the 2-liter bottle of pop for $3. You still want pop, but you're willing to pay more per unit just so you can have that taste. So you're going to buy the 350 milliliter can for $1.50, which you didn't get the best deal, but it's less out of pocket right now, right?
I got you.
And the fourth person is the worst person. And it's not their fault. They just stopped buying.
Yeah. I'm picking up what you're laying down there, bro.
Yeah, well, pick it up faster. So people always ask, so what do I do? I got these 4 types of customers. How do I solve this problem? The main thing you have to do when price inflation hits is you need to invest in market research. And when I say invest, that's either paying somebody to do it or an agency, or invest the time yourself.
Yeah, for sure.
Because if you're penny pinching, investing the time is the way you can do it, right?
And you know what? I can really relate to that with some of the conversations I've had with some of our clients, right? You've got rising interest rates, so mortgage payments are higher, your truck payment is higher because they're no longer given the 0% interest rate. It's like people are really feeling the crunch, right? So something has to give at some point, or people are going to start racking up debt. So how do you market that to say, okay, well, this is the product that we offer. How do we stay in business?
That's the thing. You start with this market research. So when inflation rises at levels like we're seeing, your target demographic that you've always sold to, you need to throw that out because that data is no longer relevant. And those assumptions you made back then are not even close to what your demographic is today.
The times, they are a changing.
They are a changing. So what you need to do is get out into the marketplace, talk to your customers directly, find out their pain points and how they're changing their spending habits during inflation, right? After you get that data, you need to quantify these shifts and make the necessary changes, whether that's to product or price or both. But you need to do it without pissing people off.
Also, if you're genuine about problem solving to your target market, you can help problem solve by finding the product that they're going to be able to afford or want to continue to use through this, inflationary period.
Well, exactly. So we see big corporations do this all the time during inflation, and most customers don't notice when they do it because I like to say they're sneaky about it, and it's not malicious. It's just, it is sneaky. So like, let's say a box of crackers in the grocery store, for example. 6 months ago, you paid $3.49 and there was 300 grams in the box. Now that actual cardboard box, it stayed the same size, or the graphics changed and the cardboard box is a tiny bit smaller, but you don't really notice. And it's the same price, $3.49, but now you're only getting 200 grams. But it's the same price and you're willing to buy it because most of the time you don't even notice.
And I'm not much of a conspiracy theorist, but I'm convinced that that's not just inflation. I think that's companies that are really trying to capitalize on, blaming inflation for increased costs, or like you say, to just provide less product for the same price.
True. And then even sneakier on that side is, let's say that same cracker company, they sell the 200 grams for a month and then they actually make the cardboard box bigger and they put 250 grams inside. The graphics on the front say now 25% more, and they're still selling it for $3.49. So they lowered it for a little bit, less product by 100 grams. They sold it at the same price. Then they increased it by 25%. And then they're marketing saying, it's 25% better now, but it's still the same price you've always paid. Whether it's malicious or not, and I'm sure some big companies do it in the sense of, let's just make a buck. But during inflation, smaller companies can do this same type of practice, right?
Right.
And those who catch it, again, some will hate the company, some will, understand that it's inflation and that's what it is. But vice versa with price. If you're going to raise your prices, don't just raise the prices. One of the things that drives me crazy, and I have a client like this, they raise their prices and every customer who comes into their shop, they go on this rant. Yeah, you know what? Our costs are so high and blah, blah. That's why our prices have gone up. And they just seem like angry. And that doesn't work.
That's a huge turnoff for me.
Yeah, exactly. So you need to market differently than you've ever had before. So let's say that butcher shop increased the price of the ribeye, and maybe you have marketing pieces around the shop that instead of just marketing that ribeye, now you're talking about the farmer who provided that beef to you. And you're talking about how he doesn't use antibiotics and that the cows are grain fed and the health benefits of your beef versus the other beef.
Quantifying the increased cost. Yeah,
exactly. People are willing to pay that little bit more because now they feel better about it because they're educated about it, right? And that's kind of like your business, to be honest. You're service-based. After you do your new market research, and when I say you, I mean me.
Yeah,
it's
100%.
It's about educating people, right? So you're not out there selling product. You're bringing in clients now, and you're more on the educational part of things, which calms your clients down. Because once you start giving them that education, they say, okay, now I understand why the markets are doing this and how they're going to recover and whatnot.
Absolutely.
You have to market a little bit different. Anyways, the last thing I'm going to touch on is the biggest part, and that's continuing to do your market and advertising more now than ever. But you have to be strategic, right? If you're losing money, you got to work out those kinks. And when I say work out those kinks, it might not just be raising the price of that ribeye. Maybe it's, you know what? We subscribe to Spotify so people can listen to the nice music in our store. Well, you know what? Maybe you end that subscription of $20 a month and you turn on the radio station.
Well, I'm sure Spotify is going to love hearing that.
Find us on Spotify, guys.
Do you own any shares?
Thankfully not yet. But you know what? I might buy in now that after I said that, their price is going to go down a little bit.
Yeah, there you go. Buy low, sell high.
So your marketing needs to show empathy as well. And you got to put that in your storytelling of your marketing. So what we do is we put ourselves in the customer's shoes. We communicate that message and we try to make them feel a little bit better about coming into the shop or the office or whatever your business is. Because if you're not giving them that empathy that they're looking for, they're probably not going to come to you. If all you're doing is putting out a flyer and saying, hey guys, look at our product and it costs this much, they're not going to care. You need to think about them and why. You need to tell them why they need to still spend their money with you.
I really hate putting myself in my client's shoes when my client is a 5-foot female with high heels, because it's really uncomfortable to be in her shoes.
I've seen the pictures of you before with heels on.
In the old grocery store days when I was in high school, I remember going to work for a whole day dressed as a woman for Halloween, and it's quite comical. There is evidence of it somewhere.
Hey, listen, that's it for me. The key points here: if you're raising your prices, make sure it's a must. Don't just do it because everyone else is doing it. If you don't have to, if you have a business that actually is lucky enough that you don't have to raise your prices, don't do it. But if you have to do it, continue to market. Do your market research.
If you have the ability to stay status quo in an environment like this, that's going to really help you sort of survive, right?
100%.
Because people are going to come back better, bigger, and stronger post-inflationary problems. And they're going to recognize that you didn't gouge your clients just because you could.
Exactly.
Through the pandemic, we heard so many fucking stories, whether it was some of the carriers we use for our investments in insurance, or it was, connecting with CRA or whoever it is that we have to work with. They're always blaming the pandemic, COVID, our service sucks because of COVID.
Yeah.
Now we're going through inflation and everyone's raising their prices and, it's because of inflation. It's like, if you have the ability to stay status quo, I am a firm believer that you are going to shine like a rock star when all this shit is behind us. We got to remember that inflation is going to be pretty temporary as well too. So
yeah, and your messaging, if you can stay status quo, is simply that we are here for you and we're not changing. That's all I got. We need to take a break, and we should. Do we have a Spotify ad? Because I feel like we need to redeem ourselves a little bit. We'll be right back.
When we talk about our holistic approach to financial planning, we stand by it. That's why we now offer in-house bookkeeping. It helps keep your business organized
and helps you live well today while planning to live well tomorrow. #call René of St. Cyr & Associates.
Hey, welcome back. Listen, I think I crushed the hell out of that inflation talk before the break.
Oh, hells yeah. You really know how to rise to the occasion.
I think I do.
That was a joke, dumbass. Rise. It's my inflation joke.
Oh, that was funny.
You'll have to excuse my friend. He's a little slow.
Well, listen, let's see if you can do any better. I hope you brought your A game because mine was pretty good. So what do you got?
Hey, I have a guest for us today.
A guest? Do I have to guess?
No, you don't have to guess the guest. We have our friend Patrick Doherty from Premier Mortgage Center right in your backyard in Toronto, Ontario.
Wait, he's in Toronto? I thought he's from Ireland. Listen to him. Hey, Patrick.
Hey, guys. How we doing?
Great, man. Thank you so much for joining us.
Thanks for having me on the show, guys.
So we brought Patrick in because he's the big guns, and we want to talk about how to navigate renewing your mortgage in this high interest environment that we're seeing, which we haven't seen in like 40 years. Are your clients going crazy or what?
Yeah, for sure. The phone hasn't stopped ringing in the last 9 months since rates have started to increase dramatically.
And that's not just because your accent.
That accent would make you really good with the ladies, I'm sure.
My panties have already dropped.
2 numbers on the one line.
He has an assistant to book his appointments now. So, Patrick, I've got a lot of my clients are coming in with these generic renewal letters from the big 5 banks, renew for 1, renew for 2, renew for 5 years. And the problem with variable rates right now, like I've seen that with my own mortgage where I had a stellar rate a year and a half ago. And now, we're not in that same environment anymore. From your perspective, Patrick, what is it that we need to be doing to sort of navigate choosing what mortgage and what type of length should we be looking at, with our current interest rate environment?
Yeah, well, going on your point there, we're receiving very similar calls to yourself, René. I think with the rates going up, there's been a lot of panic now in the market, specifically with variable rate mortgage holders, like you've just mentioned. I think it's important that we distinguish that there's two types of different variable rate mortgage. There's the ARM, the adjustable rate mortgage. So these are the people that's payment actually changes. So the amount they pay every month changes as the interest rate increases.
Right.
So they're the people that are essentially getting kicked in the butt right now. We also have the other variable rate mortgage holders, VRMs, whose mortgage amount doesn't increase with the rate. The amount they pay every month doesn't increase. It's just the amount that goes to principal and interest that changes.
Interesting.
So they pay more interest every month rather than it going to their paying off their principal. So these people are in a slightly different situation. They've got the option of holding tight right now. They're probably receiving a letter from their lender encouraging them to take action, but they're by no means obligated to take action.
So I got the letter to take action on my mortgage. So my action was I burnt the fucking letter.
Yeah, not bad. Not bad.
I was like, there's nothing I could do. Interest rates are on the rise.
Yeah, I know. And I mean, where you live, there's no chance of starting a forest fire or anything. So,
yeah, no, there aren't any trees here at all.
Yeah, just berries in the snow.
But to that point, though, should we be taking action, or what is there to do other than sitting tight and riding the wave?
Yeah, well, I mean, there is a number of options available to people. Me as a mortgage broker, I would suggest, look, everybody's scenario is different. Everybody's situation is different. Some people have got different debt to others. Some people have got a lot of equity in their property right now, so they've got options with stretching out their amortization. Interest rates have risen, but we're hoping that the curve is going to change there. Hopefully it's going to plateau now very soon, and maybe even start to go down within the next year, or certainly 18 months or so. So my advice is to reach out to myself or another mortgage broker. Let us look at your situation and see what we can do for you. But certainly don't panic right now.
So I have a question. So I did this just before the interest rate started to rise, and I had a pretty large penalty on my mortgage. But after doing the math, it made more sense to lock in, because I'm a fixed rate guy. That's my gig.
Is that you or is that Aaron?
It's my wife. Yeah, she actually locks me up at home while she deals with all this.
I thought so.
When we kind of renewed, we shop around, we do everything, and we try to do all the right things. But I find, like, anytime with big banks, I feel like there's like these renewal traps. We were with the big banks with our mortgage the last time because they had the best interest rate at the time, and it worked out well, and we didn't have a penalty to pay. But then this time, the big banks, obviously, the interest rate's going up. We ended up at a credit union because that was better for us, interest rate wise. So being fixed, like, these renewal traps, I feel like our bank was the first to jump on and say, no, paying the penalty, that's a stupid thing. Leaving for an interest rate, that's a stupid thing. So are there renewal traps that people can look for?
Well, I think the stats show that 85% of Canadians sign with their original lender on renewal, right? I mean, there's a number of reasons for that, but the main reason is that it's pretty convenient, right?
It's easy. Yeah,
it's easy. You get that letter through the post, or you get an email with boxes to tick, various options of terms and rates.
Yeah,
and most people go ahead and jump on that.
It's astounding how complacent people become with their finances.
Yeah, it is, dude. It is really, really astounding for sure.
I got out of that because, I used to be very faithful to Royal Bank. But once they got rid of the teddy bear on my bank card, that was it for me. I was gone.
Yeah, the crazy thing is, people are missing out on potentially massive savings by not shopping around. I mean, in terms of traps, it's delving down deeper into the mortgage to see what your prepayment privileges are, right? So a lot of people they don't look at the fine print and see, they may be coming into money later in the year or later in the term, and they may have options of paying down some of their principal and paying off their mortgage quicker. One of the traps that people can fall into is not looking at the at the prepayment penalties when they break their mortgage to refinance, for example. So 3 in 5 Canadians actually opt for that. They tend to refinance and pay the penalty. So if you don't know what that is going to be in advance, you're leaving yourself open to get really, really stung. So that is a trap you can fall into in renewal, and it's something that people overlook.
I'm happy you brought up, Patrick, the prepayment options to have this opportunity to do a lump sum every year, because we really noticed that through the pandemic where traveling was at a low, availability of vehicles were low. People were working from home, didn't actually need a new vehicle. So most of the people we work with had an abundance of cash through the pandemic, right? So a lot of people had the opportunity to quick pay their mortgage. So it remains the same when we're in a high interest rate period. Is like, okay, if you have excess cash, maybe better off to really focus on putting those extra payments, whether you're doubling up on your weekly or biweekly mortgage payments or you're doing the lump sums. That might be more advantageous than throwing extra money in your TFSA.
Exactly, René. And even on that point, with higher interest rates now, people have got the potential to accumulate more in savings with the prepayment privilege. All that money that they put in is going straight to the principal, right? So that's also reducing their amortization. So they're going to pay off their mortgage quicker.
And from a strategic standpoint, so a lot of the people we're chatting about when we talk about increasing interest rates is that the ones that have a mortgage that's coming due in the next 6 to 18 months are shitting their pants. Like, what would you suggest in terms of terms? I mean, because I don't think interest rates are going to be sustainably high for too much longer. Are you recommending something shorter term and trying to hedge against the fact that interest rates are going to drop? So what are you and your team doing to kind of navigate or guide your client base, to make sure that you're looking after your people?
Yeah, absolutely, René. Right now, we're not really encouraging 5-year terms. We're mainly looking at 2-year, 3-year fixed maximum. One of the other traps there as well, going back on an original point with renewal, a lot of lenders are offering 5-year terms on renewal. That's a big trap right now, guys. Very easy to fall into. You've just come out of a 5-year. They're offering you another 5-year. You tick the box.
And they market it so well too.
Absolutely. It's so easy to do. Nobody wants to make any predictions, especially in the current market. It's a difficult thing to do, but we're hoping that rates are going to plateau and definitely come down within the next year to 18 months for sure. So we're encouraging people to look at a 2-year option, maybe a 3 if that's more suitable to them. And then we'll see where the land lays after that.
So I have a question. With things on the rise, like right now, or even just in general, is there a right thing to do?
Like I said before, everybody's situation is different. Everybody's personality is different. People that are a little bit more risk averse tend to edge closer to a fixed rate mortgage. Historically, over the last 40 years, we've seen that variable rate mortgages have been the way to go. They've definitely been cheaper. But, in saying that, variable rate mortgage holders over the last 9 months have suffered a lot of pain. So a lot of them currently find that a difficult argument to get behind.
But if you take the emotion out of it, though, Patrick, if you take it's like the stock market, right? And sort of looking at your portfolio through a market correction. What you just told me is that over 40 years, it's made more sense to do a variable rate mortgage, but only in the last 9 months has it been truly painful. I mean, that's a pretty small fucking portion of 40-year history.
Yeah, absolutely. Absolutely. But
so if you take the emotion out of it, you just got to ride the wave and just wait for rates to drop.
Yeah, but unfortunately, we, the human race, we've got a short-term memory. So when that money's been extracted out of our pocket at a rate of knots, then we're going to feel that pain. Our savings 40 years ago don't really make up for that. So.
And to your point, without making predictions, like you say, I think industry is pretty much, it's unanimous that rates can't stay like this. And we're actually seeing it industry on the GIC side. We probably work with 30 or 35 banks, trust credit unions that offer GIC products. Like the 1-year rate is actually paying more than what the 5-year rate is. So obviously the industry is anticipating that the rates are going to drop, because like if you were paying, as an institution, if you were paying say 5% for 1 year, but they anticipate rates to drop below 3% again for GICs, why the hell would they fucking give you 5 years worth of 5% interest when they know that in 24 months or 36 months that rates are going to be back down to normal levels. So we're seeing the 1 and 2 year rates, like you mentioned, are the best GIC rates available in market right now, whereas 3, 4, and 5 year rates are starting to drop.
That's what we're seeing as well, René, and we're kind of coming from the flip side. 5-year fixed rates are very favorable right now because banks are really looking for you to lock in at those prices because they probably foresee them dropping over the length of the term.
Except, like you say, if you lock for 1 to 2 years and then you renew, you're still going to be better off than that shitty 5-year rate, which is funny because now we're saying, well, it's a good 5-year rate. But 6 months ago, we would have said that's a fucking shitty rate, right? So that's one of those traps again, is like, don't be fooled by a better 5-year rate than the current 1-year rate. Because if you sit tight on a 1 to 2 year term, like you were saying earlier, you're likely over a 5-year period going to be better off.
Absolutely.
Unless your wife is Erin and she
obviously
figures things out before shit happens.
Well, I think the big picture here for me is that it's much like René and I have talked about financial planning before, and it's nothing against the banks. If I go into the bank and I'm just making a deposit, they come up with a checklist and it's like, oh, do you have, would you like to do an RRSP? And half the time they don't even know what I have, and they're just reading off a script. And it's someone who, yes, has a little education on it, but they have to be schooled in everything at the bank. They're not just specializing in one thing, even though they say they are. I feel like it same goes with the mortgages, right? It's like if I go into one of the big banks and I sit with one of their mortgage lenders, we sit there and we talk, and I'm like, I feel like you're just giving me the cookie cutter package. Whereas with someone like you, who's a mortgage broker, you kind of have keys to every puzzle out there and can help us find the best rate. Is that right? Or am I just...
That's actually a really good segue into asking why a mortgage broker over the traditional banks, because like you mentioned about RBC and your cute little bank card, a lot of people get comfortable and accustomed to just walking into their regular bank without really shopping anywhere for the best bang for their buck. Why Patrick Doherty? Why mortgage broker rather than walking into one of the banks and just renewing with your current lender?
Yeah, I think, when somebody does walk into the bank to query about a mortgage, the bank really only has one product to offer, and that's their own. We have access to a whole host of lenders, including most of the big banks themselves, but we also have access to specialists in credit unions, monoline lenders, and they have a vast range of products, for every different scenario. So whether you're a first-time buyer, whether you're self-employed, business for self, whether you're looking to buy an investment property or whatever it might be.
I think that's a great point, because actually long ago when we first got I think it was our second mortgage renewal, we actually went to a mortgage broker. We sat down with them, and we were with one of the big banks at the time, and they had given us a rate from our bank that we were using that was better than what our own bank told us,
right.
Which I thought was insane. I was like, wait a second, my bank didn't even give me that rate.
Sure. Yeah, we have access to the banks through the mortgage channel, and having done past business with them, they certainly give us more favorable rates than's available going through the front door for the public. So yeah, that's probably why you're seeing that.
Nice. Hey, listen, guys, with Patrick's accent and everything, it just gets me excited about Ireland and travel and stuff like that. If you guys are okay, I'd like to take a quick break. Patrick, I would love you to stick around, and I want to talk about some travel when we get back.
For sure. Look forward to it.
Awesome. All right, we'll be right back.
Ciao.
Want to be more prepared for tax season? Develop the right strategy with a preliminary plan now, and we can help you save as much as 53.53% on your taxes. It's a no-brainer. Prepare now and celebrate at tax time. #call René of St. Cyr & Associates.
Hey, we're back.
We're back.
All three of us.
I just cracked open a nice Chianti. I feel like I'm in Italy.
Listen, so we know by now that Patrick's from Ireland. I've said it like multiple times.
What gave it away, bro?
Well, you know what? His accent, it's like I said, it's a panty dropper for me. Mine are already around my ankles. So since you're from Ireland, which means you have at least taken one trip in your life, I assume you got on a plane, you came here, you've had at least one trip, maybe more.
This guy's quite worldly.
I'm always interested of how people travel. And what I mean by that is what kind of traveler are you? Are you like a resorts only? Do you go Disneyland, you go sandals, stuff like that, just resorts only? Or are you like the Airbnb type? You like to be a local? Like what kind of traveler are you?
I certainly fall into category 2 there for sure. I mean, sometimes I don't even bother book an Airbnb. I'll book a plane ticket. I'll hop on it. I'll get out at the airport. I'll hop in a cab and I'll ask the driver to take me wherever he suggests. And we'll take it from there.
That's ballsy.
Yeah, Patrick is quite an adventurous person. And I think you've traveled a fair bit, Patrick, from what the conversations we've had, eh?
Yeah, absolutely, dude. I've been very fortunate. You know, growing up, our parents were huge advocates of travel. My mum often said it was one of the best forms of education. Now, don't get me wrong, we didn't come from a wealthy background, but my parents worked hard, saved up their money, and once a year we took a big family vacation. And very much in the style I just mentioned, we would get on a plane, get on a boat. We'd sometimes bring the car on the boat, and we'd drive it around France or drive it around Italy.
That's amazing.
You know, nowhere booked in advance. Just see where the road takes us, you know?
That's so awesome.
I can totally relate. You know, it's like my family, we, go to Ottawa and Quebec and Toronto.
I was thinking, how the fuck are you relating? Fuck me, man. Fucking growing up, Darryl would be like, yeah, I'm going to BC with my family. But there's this tiny little community, like 20 minutes from Kirkland Lake, and it's called Boston Creek. It's not, there's like 4 houses. It's like, yeah, that's not BC. That's Boston Creek, dumbass. We're not worldly travelers at all.
No, not at all.
I remember growing up with my parents, we had a station wagon, 5 kids, and our big trip was going to Timmins, an hour and 20-minute drive, and they'd make a bed for us in the back so we can nap halfway. Holy man, that's us, man. Here's Patrick talking about putting his car in a boat and going to Paris. Like, I love to travel as an adult, but as a kid, I did not have Patrick's parents.
No, same. Our biggest trip it happened like every 4 to 5 years. It was like the Olympic schedule. We'd go to Canada's Wonderland because we saved up enough to go there.
Oh my God. No, I never went. I went to Canada's Wonderland when I was old enough to take myself there.
So listen, I have a question since we all have experience. Again, René and I have very little experience traveling. René more than me, I think. But what's one tip you can give that makes every trip better?
Oof, good question. I would say don't drink the water from the tap. When asking the locals if it's okay to do so.
That's funny. So René, I'm putting you in the hot seat now. I know this, but are you the resort type or the Airbnb become a local type guy?
It depends. Like, if we have a really busy year and I just want to escape, sometimes I want to be pampered.
Yeah.
There are some occasions where you want to go to a small island and you want to go to an all-inclusive and you want to make sure that, you have the best view possible and all of the amenities. But even at that, I have to escape and get off resort and mingle with the locals.
Yeah, I'm the same.
Because that experience of really submerging yourself with local culture, local food, the people are always amazing. So even though I like to be pampered from time to time, I have to escape and I have to sort of get to know the local life a little bit. So I'm more of an Airbnb overall and just winging it for sure.
Nice. I'm that mix as well. It's like I like being the local, but I also like knowing to have that safety net, especially when I'm in another country, that I have a resort that I can just go back to and just chill if I need to. And there's no worry about where am I going to find my next meal or whatever. So
I find as an adult, I'm trying to catch up on some lost time on traveling. And what really inspires me to travel is food. In pretty much every podcast, we bring up food in one way or another, but I absolutely love food and I love to experience food from different cultures. And that really inspires me to travel to different places and have those experiences.
Yeah, for sure. So Patrick, where is your next trip? Where do you want it to be?
Probably looking at South America, guys.
Nice.
Maybe Santiago in Chile is on the cards. Nice wine region down there.
Nice.
You've traveled a hell of a lot more than Darryl and I put together. Where would you say your favorite place has been?
Maybe I'm a little biased, but I just love Europe. I love mainland Europe, specifically Italy. The food there is just off the charts. I just love the simplicity of it.
It's funny how you describe why you like Italy, though, is the food, right? I think we all gravitate around that very much.
Absolutely. Absolutely.
Nice. Well, listen, Patrick, it's been great having you today, not just for your accent, but for your knowledge as well.
Thank you very much, guys.
Well, hopefully you can join us again because, interest rates are always like going up and down, and with mortgages, There's always questions to be answered. So hopefully you're around when we can ask those questions to you.
Yeah, I'm always around, guys. Thanks a million for having me on.
Patrick Doherty of Premier Mortgage Center in Toronto.
Thanks, Patrick.
Thanks, guys.
You the man.
Patrick's a good guy. He knows his stuff for sure.
Yes, he sure does. He's a great, solid dude, too. Actually, something that you might not know about Patrick is he's a fucking national champ at billiards. This guy's fucking amazing.
Had I known that, I could have got him to teach me some stuff.
I tried back in high school and I gave up on you. I said, go do some marketing instead. You got a chance at it.
I don't know. I've been pretty good with my balls.
Yeah, it's your cue I'm worried about.
All right, guys. We'll see you next time.
All right, ciao.
Bye.
Everybody